Gold and silver had a tough time lately, but before the weekend we saw some turnaround. Is there a chance of more to come, or is it just a short breather in the downtrend? Let's have a closer look and we will see. To be honest, it's straightforward to say, yeah, let's see what will happen in the near future. Of course, we don't know exactly what the future is bringing, but we can see, we can judge, we can estimate what the market participants have been done so far and what we can expect out from this. Because most of the time we can read from what they did before, what they will do next. This is something we know in real life, of course. This is all the same with the markets. When you can read the situation, when you can read the mood of people, for example, you can think, okay, next step will be this or that. This is being one step ahead, not knowing what the future is bringing, but giving us an information about what is the best chance to do. I can tell this from a trader's perspective. I'm trading since nearly 30 years now, and I can tell you, of course, it's not a 100% sureness that we can get from the chart, but there's a chance that we can read enough out of it to make our trading decisions more value. So let's have a closer look to gold now, and silver, of course, as well. I think we don't need to talk too much about the big picture because maybe you were following the old videos already. This is still one valid situation currently, and you see that currently, because the market came down so strong, you can see it here in a daily chart. This is indicating that the market is not in the best situation for a bull market. So this is why I dropped my idea that the market has a good chance to directly continue to the upside. This is one thing I thought could happen as long as the market in this piece here of the chart is not moving like this, but moving in a corrective pattern. If the market would do something like this, I would stay with this picture here because this is indicating we had a more strong move to the upside like this, like more or less this one, like this one. And something like a corrective pattern to the downside would indicate, it is moving down, but not on the strong side. The buyers are stronger than the sellers because the sellers don't have the power to push the market down strongly. But this is what we could expect in a positive way. But this is what we got. So this is definitely killing this idea and is killing this idea. So currently I'm not with the bullish picture anymore, at least at the current moment. I think it's still possible, of course, but the probability for a rising market at that very point here is way lower than that the market is not in this situation currently, and we can expect more to the downside. It is not 100% given that the market will drop to this level here, but something like this, something like waiting a little bit longer, coming a little bit lower, like let's say the intermediate lows early this year in March, or roughly in March this year, around 1,675. Pushing through these levels again for lower levels, just a little bit, maybe even reaching the trend channel, which is really typical. It's not a must-have, it's not a 100% sureness, all the time it needs to go there. No, it definitely don't need to go there. But I think there's a quite high probability that roughly this area here, below this level and roughly near the downtrend, the lower downtrend channeling here, the chances are quite well. Is this supported by the lower time frame? By the picture in the lower time frame? Yes, it seems so, because we currently have this strong movement to the downside. So let's stick with a lower time frame chart now in the 4-hourly chart. You can also pick an hourly chart if you prefer, or anything else. But this is giving us an indication what we can expect the very next days, or maybe within the next week. We should have a closer look at this, of course. Normally you can say that when you have a strong movement followed by a weak movement, the strong movement will come again. So it is something you can see here in the big picture, for example, a strong movement to the downside, a weak, shaky one to the downside. Here, okay, next one strong to the upside, ABC to the downside. Things like this are giving us an indication we will continue. The last strong movement we have seen was this one. So if this is followed by some weak movement, which could look like this, for example, then it is most probable that this will follow again. This is really, really typical. This is a normal zigzag or impulsive situation. We can have some theoretical things here, for example, to give you an idea how it looks. If you have a strong movement to this side, ABC or other corrective, this does not necessarily need to be an ABC pattern. It can be any other correction as well. But a corrective pattern into this direction, we can expect that in the aftermath, after this one, we have a really strong movement to the downside as well. This is always if you have an impulsive move. This is also if you have it's only to the upside here in this picture, but if you have a first strong move here, shaky to the downside, you have to expect something again into this direction. If you have something like a zigzag, for example, you have a strong movement to the downside, a corrective pattern to the upside, and a strong movement to the downside again. So this is happening in all of these times. But what is with all the others here? If you see, for example, a double zigzag, we don't have a strong movement to the downside. It's an ABC pattern here. If we have a triple zigzag, let's see a triple zigzag, it's an ABC pattern here in the first part of the market. If you see this one, if you see a flat one, it's an ABC pattern. So if you have something like a 5-wave move or a really strong movement, you can always expect this one. There's one single situation in the flat corrective pattern which can mislead you with this one. But in this case, if you're a little bit aware of this situation, we can nearly be sure that this one is not preferably, oh God, I cannot pronounce it, but I can, most probably, this is not the C wave, the last wave of a flat. It is possible, but by length, so the size of it and the situation with the chart here beforehand, it is not the preferred picture that this is the C wave of a flat. If this is not the C wave of a flat, it is the first wave of an impulsive move, which leads to lower levels here. It is the first wave of a zigzag, which leads to lower here. So we can expect, in case this is something corrective here, we have to check this and we have to clarify how does it need to look like to bring us the opportunity for this one. But if this is a strong move, and I can confirm this looks like a strong movement, if this will become a corrective pattern, which might be something we can have in focus really soon, we should expect something like this. I know some people are hating me for telling you this because they say, because of you are talking so bad about gold, the market is not pushing forward. That's not true. I'm just watching what the other market participants are doing. I'm not judging by my own opinion. I don't have an opinion to gold. Of course, just by educated guessing, I would say, inflation is coming up, so gold should rise. Yes, I think a rising gold price might be good. But as a trader, I'm not into it. I don't have an own opinion. As a trader, I'm just trading what the market is giving me. This is what some people don't know or don't understand. As a trader, I'm not interested in what the market is doing because I'm influenced by something. I'm just interested in getting some price differences. Of course, if you're an investor, you can say, hey, I believe in gold, the gold price will go up, I buy it. Yes, why not? I'm not against it. Maybe it's more suitable to wait a little bit to get cheaper entry prices. If you are long already and you say, I could stand this setback here because I'm expecting the market to gain anyway, why not staying in the market? I'm not against it. I would not give you the advice, close all your physical gold positions because this is not worth it. No, but I think we should expect that at least currently the market participants are not pushing forward, so it might take more time until the market will turn around to higher prices over 2,000, maybe 3,000 in the future, I'm not sure. But this is nothing I want to talk about now because I'm seeing this as a trading position, and as a trader, I see that if this happens, yes, and this will happen, more, we will see. We can strongly expect something like this. especially when we are triggered on the lower side, which is something like this intermediate low here. It does not necessarily need to look like this. It can all be something like also be something like an ABC pattern. So you also have some trigger level, which might be here, and you can expect after that this what we've seen here before will happen again and lead us below this level, and gives us the opportunity to continue even a little bit further to this area here, roughly 1675 to roughly 1550 or whatever. This is not an exact number. We can talk about this later. But anyway, if the market is here and I'm a trader reacting and trading the market on a shorter time frame, I should be aware this might be really possible in the near future. So what do we need? What does happen here, or what do we need here to be a corrective pattern? Well, normally a corrective pattern should be should move in the other direction than the first movement. And I want to bring up something which is really nice to know. This is something which helps a lot if you want to see whether the market is turning or not. A strong movement looks normally like this. So this seems to be the main trend. But to be honest, this part here does not look like a main trend anymore. It looks like a corrective pattern. But this cannot be. A corrective pattern is always against the trend. But in this case, it's with the trend direction. We have this situation in the end at the end of a trend, which is called an ending diagonal. In an ending diagonal, you see that the market is still pushing to the upside, but you see a lot of overlapping here. And you can see these ending diagonals, if you want to see where they are, you can see ED's ending diagonals are only in the last wave. Not before, only in the last wave. Maybe you can see it here. Only in the last wave. Maybe you can see it, for example, here. Only in the last wave. So whenever you see something like this, you can expect, it's going with the trend. It's going in a corrective pattern, like we've seen here. We should expect that this up movement is coming to an end. Of course, not necessarily forever, of course not, but in the very moment, this is indicating corrective pattern into the trend direction. This comes to an end soon. So now this was the strong movement to the downside. And you can see the fifth wave, the last wave here, is also looking in a really corrective manner with a lot of overlapping. It's still going into the direction of the trend, but it's overlapping. So you can guess, this seems to be an ending diagonal, which means that this portion of the market or this of the chart is coming to an end. So we should expect something into the other direction. And if, which is not given, but if this part from here, let's go back a little bit in time, is coming up in a corrective pattern, we would expect a continuation to the downside, like I've mentioned before. If the market here comes up in a strong manner, in this way, coming up with a corrective pattern into this direction, then we can expect that this will occur, and maybe the bearish picture I've announced before might be done. No chance for it because the market turned around. This was not a first wave of a zigzag or impulsive move to the downside. It was the last wave, maybe for a flat correction or whatever. So it is really important to see what we will have here. So currently, at the first glance, this does not look very impulsive, to be honest. Impulsive moves look like this, or even more convincing, steeper. Or even if not like this, you can sometimes have some breaks within, but you can see they have not so much overlapping. For example, wherever you check this, you see there are some pauses in between, but there's a lot of overlapping. But if you see the counter moves here within this uptrend, this is an uptrend because the market gained a little bit, but this is in a corrective fashion. So I would not say that this is an impulsive move. This is indicating, okay, we seem to be in a corrective pattern here. What is the normal size for a corrective answer on this downtrend. So if you see this from here to there, you would expect typically, this is just by statistics, that the market roughly will reach this area here. This is not a must-have, it is just by probability. You can see if you want to check, is this something like this? How big is this second wave, for example? You can just, this is just an educated guess by statistics. You can see the second wave, but compared to the first wave, you can see more or less into this area here. It can be 30%, it can be 40, it can be 50, 60, but even lower, it's losing probability. And even before, it's losing probability. You can see it is roughly the middle. With my statement that it needs to come into 38.2, which is roughly here, and 61.8, which is roughly here, you see I'm a little bit biased to the back end of this red area. It is not the height here. Please don't get this information wrong. This is not the highest probability. It's just the area below this one. So you see there are no numbers. It's not the height here. It is just the area here. If you cut it with a scissor, for example, you can see which one is the bigger half, the left side or right side, for example. So I'm a little bit biased to this end because this is giving me a higher probability that this is over already. If I have a setback 30%, it is absolutely possible, but probability that something will follow is quite high. If you take a scissor, cut it like here, you can see that the whole area here in this part of the graph is way bigger than this one here. So you can see, okay, it's not very wise to just wait for a 30% setback and say, okay, now I go into the market because the probability is quite high that there's more to come. So keeping this in mind, we can roughly expect that the market will come into this box. You can see it's a little bit below 38.2. It can be a little bit higher than 61.8, but this is something where typically corrective patterns are coming to. And they need to come there in a corrective pattern because this part of the chart needs to be corrective. So what I could expect is that the market in the next few days in this week will reach this area here, 1800, maybe 1830 or even a little bit higher, but something around this. And this most preferably in an ABC or corrective pattern, which is indicating that this is not the main trend situation. This is a counter trend situation, and we can after that expect when the market is coming through some intermediate lows here to continue the downtrend like we've seen here before, or even lower like we've seen here in the overall picture. So this is what I expect for the next few days. As I hope that this will be a really nice corrective pattern. If this happens, if this will be a corrective pattern and breaking through this level, which is not given yet, I'm quite sure we can expect some continuation. So why not going short now? Because there's still a chance, which is not my preferred picture, but there's still a chance that the market will gain strength and will continue to the upside. So it is not really wise to go short at the very moment saying, oh, later the market will turn anyway, so I will be the first one. First of all, it would not be wise because if entering a short position right now, you would have to stand some higher prices before the market will turn. So your stop level will be far away, and this is reducing your possible position size, of course. Maybe I should do some kind of video on position sizing, how you can do the risk and money management on a trade, which is quite important, but for this video I want to keep it like this. So I think it's not really smart. I want to expect something more detailed here in the chart to give me a good entry point with an intermediate low. Before leaving gold, let's have a short glance at the 15-minute chart, and we can see something here for the short-term traders, which is quite promising here. A strong movement to the upside, maybe a short a corrective pattern, a short-term corrective pattern to be precise, would indicate that we can expect something like here. But this is not hindering our idea because we expect something around this levels here anyway. So this might be a short-term chance here for some traders because the last one is quite strong to the upside. If you get something like an ABC pattern here, this is something we normally talk about in a BORN-4-Trading. This is nothing I can do here on YouTube because this needs a little bit short notice video clips. If you're interested in this, drop a line here in the comments. I will give you further information how you can get it if you want it. Let's switch to silver, because silver is not exactly doing the same like gold, but on the other side walking the same boots. So I think we have a chance for roughly the same, because the last movement we've seen here was also quite strong. The difference is that we don't have any start, or we cannot actually see a real start of a corrective pattern. We have a chance here from the 15-minute charts, because this is indicating 1, 2, 3, 4, maybe 5 coming down in the corrective pattern. This would indicate that we can expect the same thing like here again. I don't know whether this is more or not, but this is the same idea we had in gold before. We had it many other trades, of course. If you follow this channel a little bit longer, you can see strong movement to this one, shaky to this one would indicate that we will continue. And this is exactly what I expect for silver as well. After this strong plunge here, coming down from here to here. Typically, it would be lovely if the market is going here. And you can estimate what I wish for the shape of that, which should be in a corrective pattern. And when I say I wish for that, I'm not against all the investors outside and saying, he's wishing against me. No, I'm absolutely not. I wish you all the best profits you can have, of course. But this is just announcing what I wish, like a chart technician, to see the best out of the picture, the chart picture here in this case. It's not like I'm against bullish. For me, to be honest, it's all the same. Whether the market is going up or down, I'm not caring for this too much. And I know that more people are wishing the market is going up. So, of course, I wish that the market will go up. So I'm absolutely satisfied in case the market is doing this now. And after this one. I'm also okay with this one. We will see. I'm not announcing it is 100% sure that this will happen, but this is the most typical answer after something like this. So in case this or an ABC pattern, both are representing a corrective pattern. If this is following, I would expect when the market is triggering this level that we can expect something like this again. And this is in no way killing the bullish stance we have in the big picture. But this is, of course, saying us, we have to go into this area here again, below this last lows here, and maybe near the end of the trend channel. I'm not a believer that a trend channel definitely will turn around the market, but there are some market participants saying, we are on the lower end of the trend channel. Maybe selling is not a good opportunity anymore. Maybe buying should help us to have a good entry. So at that point, typically market participants change their mood and turn the market to the upside. We will see. But in any way, we should expect something coming down here when the market is doing this here in the near future. And for the lower time frames, if you're a little bit more active in trading, maybe you should have a short look at this market. It's not absolutely sure this will come here. It can take a little bit longer so that the market is continuing first, but sooner or later we will expect something like an ABC pattern here, and you can just say what we get here will be continued after that one, after breaking this intermediate high here. So I hope this is helping you for your own trading decisions. Please be advised that this is not a trading advice. This is just a technical learning situation, or whatever. Let's say it's a lesson for how we as a trader, as a professional trader, institutional traders are looking at the market, how we deal with the situation. We are not interested in bullish markets, bearish markets. I don't know what is the next. But the good thing is, I'm just trading what the market is bringing, and most of the time this is giving us an opportunity to earn some money out of the market. And I say it in these really relative words because I don't want to give you the impression, cool, this sounds so well, no losses anymore. Of course, you will have losses also with this trading strategy, But the good thing is the losses are less or way smaller than the profits, so you have some profits out of your plus and minus trades. So don't worry about this too much. So I'm looking forward to seeing you again. Don't miss the next videos. See you soon. Bye bye.